Now let's talk about the consumption basket because a slew of the headwinds denting the FMCG show in the March quarter, wherein commodity cost and soft urban demand stripping the fast-moving tag to a test. Let's go across to Snehi, who is standing by to take us through the fine print of the overall sector. Snehi.
Well, yes. So if you take a look at the earnings fine print for the entire FMCG space, it's been a good set of numbers coming in. Not much to complain about. Every company has seen revenue growth. On the flip side, every company has seen margin contraction. Let's take it company by company and take a look at what's happened. It's a surprising beat coming in for Britannia, wherein revenue has gone up, volume growth has been around 3%, and there's been contraction in margins. Tata Consumer, Nestle, HUL, Marico, all of these four were in line with street estimates. For Tata Consumer, revenue growth has gone up by 17.3%, the underlying volume growth at roughly 6% and contraction in the margins. Nestle also revenue growth up 4.5%. Overall margins they don't report, but Maggi has gone back to volume growth is what the company has said. Margins have very nominally contracted for Nestle this time around. HUL also inline set of numbers, revenue growth of 2.4%, volume growth of 2% coming in, beat versus expectations on that front. Margin contraction also very nominal for HUL as well. Marico inline set of numbers, very strong revenue growth coming in, outpacing the revenue growth of all its peers. A 19.8% revenue growth is what we've seen for Marico. India biz volume was also up 6%, so in fact good set of numbers coming in for Marico, but largely penciled in, so in line with the street estimates. There's been a big margin contraction on the flip side for Marico at 16.8% compared to 19.4% on a year-on-year basis. On the flip side, mixed set of numbers coming in from Godrej Consumer, revenue was up 6.3%, volume growth of 6%, margins have also nominally contracted. What has not done well this quarter, along with the quarters gone by, is Dabur, because mixed to largely weak set of numbers coming in for Dabur. Revenue is up only 0.6%. This time around, they have not reported their volumes at all, which is why we're estimating that it's a negative volume movement coming in. Or margins have also contracted to 15.1% compared to 16.6%. Overall, if you have to sum up the FMCG category's performance in quarter 4, like I said, most all companies were either in line or beat versus estimates. There have been no misses other than Dabur, which was also a miss only on some fronts. So overall, good set of numbers. Revenue gone up year on year for everyone. Margins have contracted year on year for everyone. Volume growth has been seen this quarter, but that's largely on the back of pricing action that was undertaken by the companies, and volumes have recovered well nonetheless as well. So well, that's the sum up on FMCG in quarter 4. Largely good set of numbers coming in, and no complaints for the FMCG sector.